Yeah.
Okay, but I think we have reached the time where we want to start this A2i Talk. So good morning, everyone, and welcome to this A2i Talk, which is as usual on the second Friday of every month. And let me just start by apologizing for the different times that have been circulating around about this event. Somebody have got a time that said 9:30 a.m., some 9:30 p.m. But for those of you, it's always here in the morning, 9:30 a.m. For those of you who are particularly interested in the topic, you can watch the recorded version tonight at 9:30, all free of charge. So that's the service we provide. So, and with these A2i talks, we strive to provide you with access to people who have relevant knowledge and who you would otherwise not have access to. So last time we spoke to the Danish ambassador of Tanzania, Mette Nørgaard, and today we have the pleasure of being in the company of John Magnay. John has lived in East Africa for more than 30 years, and John, I will let you present yourself and just shortly say that today we will hear him share about his experiences on how local financing institutions can support the agriculture sector. He will reflect a little bit about collaborations between NGOs and private companies, and share some general reflections on do's and don'ts when you are doing business in East Africa. So the format of today is that John will present for around 20-25 minutes, and thereafter we will have time for questions. And we are in good company among friends and good colleagues, so don't be shy and just ask your questions. You can either post them in the chat, or you can simply just interrupt after the presentation and ask the question. I think that's all from my side. So John, I'll hand over the screen to you, and please.
Thanks very much.
Yeah.
I'm going to share my screen. And
yeah, we can see it.
Okay, and now let me put it into, can you see that now? The full screen? Yes?
Yes.
Okay, right. So, so a little bit about myself.
John, we have all the slides, not in presentation mode, but all the slides.
Okay, just a minute. Okay, why doesn't it go up to?
That's odd. Okay, now it's better. Yeah.
Is that full screen?
It's not full screen, but we can see the slides. Yeah.
No,
it doesn't go to presentation mode. But anyway, I think the mode you're in now is okay.
It's okay.
Yeah.
Right. So let me tell you a little bit about myself. I've actually been in Uganda for 44 years, 2 weeks and 5 days. I arrived here straight from university at the age of 21. So I'm 65 today. And I have been involved in agriculture all my life. And I came to Uganda. I originally built 10 government dairy farms, flying in 3,000 dairy cows all over the country under the Idi Amin times. And when Idi Amin was overthrown in '79, I actually started my own business in Uganda. And over the next 30 years, I built 5 businesses, mainly in the agricultural sector, but I also had some businesses in the non-ag sector as well. And I've been involved in supplying processing equipment, seeds, tools, fertilizers into the sector. I also started buying and processing crops back in the 80s. I built the first food extrusion plants in Uganda in '86 to extrude food for refugees and malnourished children. And I've been involved in a range of activities. I retired actually from my businesses, sold my businesses back in 2008. And originally I was going to do new startup businesses across Africa. But actually, I've just spent the last 12 years developing finance for smallholder farmers across Africa for Opportunity International. And we built a program so that we learned how to lend to farmers. I've lent money to more than 600,000 farmers in 7 countries and a total of around $220 million. And that program is continuing. I am now retired from that, but the program is continuing and expanding across Africa. I've also done consultancy work. My speciality is in understanding grain markets, agro-processing, etc. So I've done a lot of consultancy work over the years. To talk about Africa, I wanted to just give a sort of a grounding of what Africa is actually looking like. You know, one of the challenges is 54 countries, and not everyone is the same. You know, we actually have everything from subtropical to tropical to deserts, etc. So in every country in the 54 is a completely different economic environment, and lots of understandings on where various countries are at is quite important. I also wanted to show how big Africa is, because, you know, Africa is 30 billion hectares, 30 million square kilometers of land. And if you look at all of the other countries that can be put inside Africa, you recognize that we are actually dealing with a massive land area with a relatively low population. To give you an idea, I always compare India and Africa. India and Africa have the same population. India is 1/10 of the size of Africa. But the other interesting statistic is in India, about 65% of the population are involved in agriculture. In Africa, 65% of the population involved in Africa. However, that productivity, we did not have a green revolution. We are still working on our green revolution that Asia had in the 70s and 80s. And we are still working on that as far as Africa is concerned. The other thing which is very important, I think we should recognize, you know, when I arrived in Uganda 44 years, 2 weeks and 5 days ago, the population was around 14 million. Today it is 42 million. And that sort of growth in population has been seen across Africa. And what it has actually meant is that we have the youngest population globally. And the average age of a Ugandan, it says 15.5, it's actually about 14 and a half now, which means that 80% of the population are below the age of 30. Whereas if you look at what the average population median age in Europe is, you'll see that you're at least 3 times older than us. And in fact, Denmark is almost exactly 3 times older average age of Uganda. The other thing is the population growth. We expect the population to get up to, by 2050, we will easily hit 2 billion. And we are on the way to over 3 billion by the end of the century. And that is 3 billion. But what it actually means, as incomes increase, consumption of the population is going up faster. The estimate for 2050 is that we need to triple food production just to feed the population of Africa. And also, because of our vast land area, there is a huge expectation that Africa will actually provide a huge amount of surplus agricultural resources for the rest of the world. Wherever I look in the rest of the world, I do not see the potential for growth. You know, I see challenges to do with water resources. I see challenges to do with soil degradation. I do not see, you know, you might be able to increase your productivity by 2, 3, 4, 5%. In Africa, we could easily more than triple our productivity from the existing land, and also the fact that we have so much land which is unutilized. I wanted to give you an idea of some of the projects and programs that have actually done well in Africa. This is a particular one which started out by providing solar kits on like a lease arrangement. The solar kits have a chip in them, and if you don't pay every week for your solar system, it switches itself off. It's been highly successful. Today, if you talk to Nkopper, they will tell you they are a finance company. They're not a solar provider. And one of the clever things they're doing, you buy a solar system, you pay for it over 2 years. At the end of 2 years, they will lend you the amount of money that the solar system is worth to do whatever you want with, or give you an expanded system and then start recharging you using the same system. Highly profitable, highly default rate is less than 1%, and is a very successful model that's been used. This is the opposite. This is a World Food Programme model where they heavily subsidize the cost of grain storage into the market, thinking that that would be the way that they would teach farmers how to utilize it. They subsidize these grain silos down to the level where people would buy them because they were 30% of their true value. And most of them got turned into water storage or for something else. As soon as they returned to the commercial price, there was no uptake. And you can drive around East Africa now and see tens of thousands of these silos unpurchased, sitting in warehouses, waiting for people to buy them. This is my checklist. You know, I actually spend quite a lot of time reviewing access to innovation partners. And very often what I see is a very good idea, but I don't see that it is actually going to be replicable or deliverable into Africa. There's too many points to actually go through, but I think you have to look at what is financeable and what and how it can be financeable, and what sort of benefit it delivers to clients in Africa. I see solar cookers being developed with $300 or $400 costs, and no way of financing. A bank cannot finance an asset like that very easily because they don't have the possibility of recovering it if they default on it. But you've got to have a look as, is this saving time, or is it saving money, or what is it doing? So it's a big checklist, and whenever I look at any business opportunities for people who want to come to Africa, I always look at that. The other thing that is quite interesting is this is the Ease of Doing Business from 2019, issued by the World Bank. Uganda is actually quite low. It's coming up, but it, you know, you see that Rwanda and Kenya are higher up the ladder. I actually don't believe that that Uganda should actually be in this particular position. For instance, if I was personally going to invest, I would not invest in Rwanda. I think I would also not be interested to invest in Kenya. The reason why Uganda is we have lots of competitive advantage, and that competitive advantage is becoming more and more obvious. We are a surplus producer of food. We have been a surplus producer of food all the years I've been in Uganda. We are regionally providing basic staple foods. We are also starting to provide chicken, fish, pig, poultry products, eggs, etc., into our surrounding markets. we have a relatively good infrastructure. We have a relatively good power. There's plenty of surplus power. You can get a 3-phase 2 megawatt power installation in a couple of months easily, because they're needing to spend to distribute all this massive hydro capacity we have in the country. In terms of finance, these are the two sort of major sources of finance for locally operating companies in Uganda. The Bank of Uganda have the agricultural credit facility. It's actually a very, very good finance mechanism. You might be horrified at the cost of finance at being 10 or 12%, but it's in shillings, so there's no exchange rate risk. And if you ask me, would I borrow money at 10 or 12% in shillings? I would say yes, because it reflects the inflation in the market. And we have sold a lot of equipment through the bank in Uganda, and we know that by the time they finish paying it off, the asset is probably worth more than double what they paid for it over the 3-year period. There's also Abi Finance, which was actually started by the Danish government under Danida, and they are providing some finance guarantees and some low-cost money to the commercial banks. And what I would say is that there are multiple funding lines. Depending on the size of any project, there are multiple funding lines available, and it is quite, if you've got a good business plan, and that is the big if you have a good business plan, there is access to finance for that business plan in Africa. The sort of thing that you would probably need to do is that I think any of the money that is being lent, you would need to raise about 50% of it before you could actually take on the debt equity options that are available. So if you've got a $3 million project, you probably need to raise $1.5 million of shareholder capital or shareholder loan to be able to get the balance. But you could borrow that money in shillings and avoid the exchange rate risk. But as I say at the bottom, the biggest challenge that I see is the lack of good business plans. It's quite frightening, the number of business plans that come across my desk, that the only place that they deserve is the shredder. In terms of developing business in Africa, I think there is definitely more of a mood. You know, I built my business on selling equipment out of Europe and other origins into Uganda in dollars, delivered CIF, and then I would do the local work on it. Today, there is more and more pressure on turnkey projects, which means a requirement for civil works and installations locally, and connection to power. And really what that actually means is that you're going to need Ugandan partners to be able to do it, either as subcontractors or as fully fledged partners. In terms of supply out of Europe compared to other origins, over the last 30, 40 years, you know, 40 years ago, I supplied everything out of Britain. I had more than 50 agencies in the agricultural sector. Today, less than 4 out of 50 are still operating in this market. The origins have gone to other sources, and there is very strong competition from China, India, and I'm even seeing, you know, Turkey is now becoming quite a large supplier of industrial and agricultural products into this market. However, the one thing I would say, if you've got a track record, if you've got a quality product, you can still sell into this market in competition with other origins. I've given the example here of Beulah, who probably have about 50% of the milling market for wheat mills in Uganda. And it's because they are the Rolls-Royce. You know, if you have a Beulah mill, it will last for 20 years. It will give you a very standard product. So whilst there are quite a lot of Chinese and Eastern European and Indian products in the market, they still are quite strong. And my own personal experience, Opportunity Bank in Uganda financed the entrance of John Deere back into this market. We are the most expensive tractor on the market. We have taken market share, one, because we put together a good financing package with John Deere, and two, when people have a John Deere tractor, they know that in 5 years' time, they will still have a John Deere tractor. Now, one area I was asked to talk about was the role of NGOs. Now, I have seen the good, the bad, and the ugly of NGOs operating in Africa. And what I would say is any NGO engagement has to have an exit strategy before it has an entry strategy. Because the one thing you must do is when you take out the subsidized costs of using an NGO to deliver on a product, you need to know that when you tiptoe away at the end of the funding, that what you started is going to continue. I actually have a description that I've used on many formats over the last 20, 30 years, trying to explain why donor and NGO projects don't work. And I call it the sandcastle technique. We can all go to the beach with the bucket and spade. We can build the most magnificent sandcastles on the beach. But at the end of the day, when you take the bucket and spade away, you go there the following morning and all that sand has gone back to the beach and somebody else is building another project 2 meters away using the same sand. And the tombstones of this is you drive into any African village and you will see signboards, very often the last thing that says this was supported by USAID or European Union or the British government or the Danish government. But it had, people in that village can actually not remember what they did. And within 1 or 2 years, there is no impact left behind. So whatever you do, it has to be a sustainability, and therefore you need the exit strategy before you have the entry strategy. However, there are areas where there is a significant role for NGOs. Access to Innovations is actually doing one in Uganda at the moment, but we have a very clear definition that this is a 3.5-year project, and we will leave in place the private sector to do what we are doing. We are not trying to build a sandcastle. We are trying to provide the foundations for a sustainable business moving forward. But there are, for commercial businesses, there are activities in Africa which would normally would be quite detrimental to the bottom line in the initial years. And I've given you a few examples. You know, introducing new technology, training farmers and SMEs and MSMEs in new practices and business. And business is a very important one to me. Strengthening value chains, bringing actors together, but not trying to run them, but just trying to get them to talk and coordinate together, and introducing things like certification for fair trade and organics. So get your exit strategy before you have an entry strategy, and do not lead a value chain or a project from the front. You tweak it so that when you leave, nobody knows that you left the room and closed the door. This is actually my own business that I developed in the last 2.5 years. And I suppose it was a bit of a dream project in the sense that I have 2 commercial partners who we worked with. It's a $3 million investment. We've developed a pig farm less than 40 kilometers from Kampala, and we got an institutional finance house to finance us, and we were actually able to leverage almost 9 to 1 on our business. So they invested in the three partners, myself and the other two partners, because we brought 120 years experience of Africa to the table. We had multiple skills, and they realized that we knew how to run a business. So this is a sample of an investment that can be made in this part of the world, and can be quite, well, can be successful. Okay, that's my presentation. Thank you.
Thank you so much, John, for sharing some of your valuable insights. Please raise your hand or post a question if in the chat if you have any. Yes, there's one here from Paul. Please go ahead.
Yeah, hi. Thanks, John. That was really useful. I love the sandcastle picture. I will remember that. I've had the same feeling seeing those signs. I'm working with the agricultural ministry in Uganda on rolling out the organic policy, which is essentially kind of a lot of good policies, but sort of an empty shell. It's not financed. There's no plans really for implementation. We're working on it. Good people there. And one of the initiative areas is supply chain, and looking at what's been done in several areas, there's some really good work, and it's at the kind of the farm level, supply chains that they're able to develop with some training. But there's some next steps, larger supply chains, you know, we have our experience from Denmark, but it's a very different situation. I just wanted to hear your reactions. This is these are organic producers, mostly producing for the local market. Some will develop to the point of being certified and exporting. First steps, and do you have any work in the area?
Yeah, so actually I know a lot about organics. I mean, for my sins in the 90s and noughties, I was the largest supplier of agricultural chemicals and fertilizer in Uganda. And it's a Pyrrhic victory because Uganda is the smallest artificial fertilizer and agrochemical market in Africa.
Congratulations.
So a Pyrrhic victory for me. But what I would say is that traditionally, Uganda is a very, very low user. And actually, it's quite easy to get organic certification because of this lack of material. There are a couple of things, you know, I've seen organic, you know, we are doing quite well in organic cocoa. We're doing okay in organic coffee. And there are a few marginal things in things like sesame seed and that sort of thing. The cost of registering internationally for organics has to be borne by the exporter. There is no way that the farmer can do it. And the one thing which worries me quite dramatically is that in, for instance, organic cotton, the lack of using pesticides and fertilizer means that yields for organic farmers have dramatically gone down, and the premium they're getting paid for their cotton is actually not justifying the organic certification. So I think, you know, it is very good for the exporter to have organic certified cotton, but when I actually look at the farmers that he's buying from, I think they have been hoodwinked into being organic just to benefit the premium that the exporter is getting. But I think there's a trend of going to more and more organics, and in fact, in our DMDP Dunedin project, we are actually looking at sustainability and smart agriculture as part of the program, and that may include going towards organic. But for the local market, I don't think there is a discerning market in Uganda apart from a very narrow band of consumers who are actually prepared to pay for it. It's the export markets that are prepared to pay for organic certification. But it should be done, and it should be structured. And I think, you know, if you could effectively not just register farmers, but also train them how to get the best out of their organic productivity, that might be the answer.
Quick response. Yeah, the training of farmers is really point number one, and then there's some group certification efforts to bring those costs down. And I've also seen some of the, like as you said, some problems of company-driven conversion, maybe not always working out well for the farmers. Are you, in your market development project, are you interested in looking at organic? Because I have a number of Danish companies that are interested in contributing and who've actually helped us work with Danita on now prioritizing organic and agroecology. Is that a possible area of collaboration?
I think probably the main focus for us is going to be on climate smart agriculture. Mm-hmm. And whether we can see the benefit of organic in the value chains that we're operating in, I am not sure. But I'd be interested to sort of take an offline discussion about it and see whether it is something that we can include.
Great. I'll share with you the recent climate panel results on organic and agroecology. I'd love to talk some more. Thanks.
Okay.
Okay, thanks for the question. Please raise your hand if you have questions. I, for one, have a question for you. You were talking a little bit about price elasticity. And of course, price matters when you compete with competitors producing from India, China, Turkey, as you mentioned. Are there certain sectors where you would say people are willing to pay the premium price for quality? I guess there's a difference between if you're in the B2C or B2B market, or do you find certain areas where it's easier to compete on quality rather than price?
I think it's the B2B market where there's a quality. But here's the thing. Where I see quality premium products coming into this market, they build reputation, they build distribution, they build marketing, spare parts, service, maintenance programs around their product, and people recognize that a product lasts if you look after it well. There is still quite a lot of focus on buying a machine from China, as an example, and knowing that in 2 years or 3 years time it will be completely broken down, and just buying another one. But at least they didn't have to spend 3 or 4 times the price at the beginning of their initial investment, and were able to build their business based upon an inferior quality product. But by the way, I am also starting to see quite high quality products coming out of China now. I think Bühler, I know of a company called Fansam who have been selling quite a lot of milling equipment, feed milling equipment in Uganda, and their equipment is as good as buying from some of the major manufacturers in Europe.
Yeah, thank you. Okay, and there's a question from Carsten. Please go ahead.
Yeah, thank you, Thomas, and thank you to John. I come from Danish, and we have a lot of activities in Uganda. We managed to train a huge number of small-scale farmers, both host communities but also refugee communities. My question to you, John, is we often come across the need for financial support to farmer groups. Can you please elaborate a little bit about your experience of access to finance for farmer groups, please?
Yeah, so I developed this financing program for Opportunity, and in Uganda we have Opportunity Bank. and the agricultural portfolio is now the largest portfolio in the bank. It didn't exist 10 years ago when I started. So we've gone from being 0 to about 32% of total lending out of the bank. We now have mechanisms where we can lend into smallholder farmers in structured groups and structured organizations, normally with a good off-taker. Under this new Access to Innovations project in Uganda, we will be utilizing not only Opportunity Bank, but other banks in Uganda to do working capital, seasonal loans, and capital loans for recipients. And it was a huge challenge 10 or 12 years ago when we started. We lost a lot of money, but today I have strong portfolios in 4 of our countries, where we are able to lend seasonally for farmer production and productivity. But it's a combination. We believe that farmers need to be trained and supported, as well as access to finance. And we also believe that you don't just finance a crop in one value chain. You finance the household to take out the household cash flow issues. Rural houses suffer dramatically from cash flow. And unless you take it out using an external mechanism, you don't have a success with the money that you lend for productivity, because they will divert to pay school fees, to pay essentials, to pay medical, etc. And the focus on the crop. So you need to look at both. And when we finance, we don't just look at what the cost of the production is. We look at the household and see what their total annual demands are on a monthly basis, to make sure that the finance that we're lending them is sufficient. So I'm a very strong believer in fully understanding the economics of a household to be able to lend to them. And you know, we have some really successful programs. I've just written a chapter for a book on one of our programs in Uganda, and I did it blind. I didn't choose somebody because I knew it would be a success story. I chose somebody and I just went to talk to them how 5 years of finance from the bank had changed their life. And I was actually humbled by the difference in the last 6 years.
Okay, thank you so much, John. I'm jumping a little bit, so that's in Danish, we actually, together with Maersk, we managed to get the first container out from Uganda through Mombasa to Europe with sweet potatoes. The quality of the potatoes was not 100% perfect, but Maersk knows now that there might be a market bringing, you know, sending products by ship. So just for all of you for information, Maersk is now aware that this is possible, and we have done the groundwork. So please utilize that information. Do you have a comment to that, John?
Look, I knew about the project, and I've been talking with Maersk because they were interested to look at brewers' waste in Uganda, and that hasn't gone far. But I could easily see a sweet potato coming out of Uganda. I'd like to look at the economics of it, though.
Yeah, thank you.
Okay, thanks for those questions, and Larsen. There's a question from Ole Havbro.
Yes, Ole Havbro from Aqua in Denmark. Very nice presentation. Thank you for that. We produce fish food, work quite a lot in Uganda today. Send about 30 trucks per week from our factory in Zambia to Uganda. It's a growing market and it's an interesting market. We work, of course, with the very big groups in Uganda, and we want now to go into more to the smaller farms. So we are considering stock facilities and even to set up a factory in some time. And we are going in studies about that now. How do you see, first 2 questions, would that be something you know something about, John, the aquaculture? And then secondly, how do you see raw materials in Uganda? Because we need to have raw materials for our factory.
Yeah. So Oli, the first thing I should tell you is that next year I will be one of your customers.
Okay.
I'm my project for 2022 is a fish farm, initially at 1,000 tons and but designed at 4,000 tons in Entebbe. So definitely I'm interested in the raw material, and also what that actually means is I'm interested in the availability of raw materials to go into the fish feed. At the moment, we have a bit of a dysfunctional. In terms of maize, I think no problem at all. You know, the 65% of the diet that you need for maize is valid. The reason why I'm sure that you're bringing feed from Zambia is that it's the soya.
Yeah, exactly. Yeah.
And you know, this is not the best climate to grow soya, and yet we are a surplus soya producer. And I think the new varieties coming through will mean that we are going to have the raw materials. The challenge that I've seen is the aflatoxins in the raw materials supply chain, and the sensitivity of fish to the aflatoxins. So I'm going to say you're going to have to do it. What you might have to do is you may have to bring in some of the raw materials to begin with, and just mix it with local maize. I believe you can get low aflatoxin maize from the commercial producers in Uganda. And you know, I see the expansion of fish, poultry, and in my own case, pigs. I see the growth in that and the competitive advantage that Uganda has to the region. We should be the meat protein source for the region. We are cheaper on dairy products. We are cheaper on eggs. We are cheaper on poultry meat. We are cheaper on fish. And all we really need to do is to get our raw material supply chains up and working. And I see Klaus is up in the corner. Klaus's engagement with us on the new DMDT product is to produce low aflatoxin, high quality raw materials to put into the feed industry.
I know Klaus very well. I was of course sorry that you talk about Bühler, because I've been at Kimberley before, so we worked with Klaus at that time with silos also. Yeah. Just to say a last question, John. I hear that if we will export from Uganda into Kenya, that will be easier than if we export from Zambia into Kenya, which we do today. And we have some competitors going through Uganda due to some trade relations. It's easier and cheaper with import duties and so on. Do you confirm that?
Only take that one offline.
Okay.
There may be some East African trade things that allow it, but it would really all to do with whether the origin certificates are being filed.
But take it offline. Thank you very much, John.
Okay.
Okay, thank you very much. And I think on these positive notes about developing the aquaculture sector in East Africa, I think we should end today's talk. But let me thank you, John, for sharing your insights. It's been very interesting, and it is of I think